Elon Musk reveals Satoshi Nakamoto's Bitcoin origins theory. Admits he doesn't understand Ethereum and makes a Mars prediction for Dogecoin amid crypto price crash. Elon Musk, the Tesla, TSLA, billionaire who has both boosted and crashed the Bitcoin price this year, has established himself as one of the most influential figures in cryptocurrency. The Bitcoin price has plummeted significantly this week, wiping out over $100 billion from the combined cryptocurrency market. The price of Ethereum has also fallen, with several of Ethereum's largest rivals leading the market lower and the meme-based Dogecoin losing nearly 10%. Now, Musk has weighed in on the Satoshi Nakamoto mystery, arguing that the true identity of the Bitcoin inventor is less important than the evolution of ideas that led to it, and naming crypto pioneer Nick Szabo as the driving force behind that evolution. You can look at the evolution of ideas prior to the launch of Bitcoin and see who wrote about those ideas, Musk explained to podcaster and artificial intelligence researcher Lex Fridman, who had inquired whether the fact that Satoshi Nakamoto's identity is unknown is a feature or a bug. It's an interesting quirk of human history that there is a particular technology with an entirely anonymous inventor. Obviously, I don't know who invented Bitcoin. But it appears as though Nick Szabo is more responsible than anyone else for the evolution of those ideas, Musk said, adding that he claims not to be Nakamoto. But he appears to be more responsible than anyone else for the ideas behind it. Szabo is best known as the inventor of one of Bitcoin's forerunners, BitGold, and digital smart contracts, which evolved into a critical component of the Ethereum blockchain. Szabo previously denied being Satoshi Nakamoto, telling financial author Dominic Frisby in 2014, "I'm afraid you got it wrong when you doxed me as Satoshi, but I'm used to it." Perhaps singular figures aren't even as significant as those involved in the evolution of ideas that resulted in things, Musk suggested to Fridman, adding, "It's unfortunate to think about history, but perhaps the majority of names will be forgotten." What is a name in the first place? It is a name associated with an idea. What does this actually mean? Satoshi Nakamoto's disappearance shortly after Bitcoin's launch sparked a decade of feverish speculation about who created it, igniting a larger cryptocurrency gold rush that resulted in the creation of thousands of different coins. Meanwhile, the mystery surrounding Satoshi Nakamoto has aided Bitcoin's development as an autonomous, decentralized technology. Rival cryptocurrency creators, such as Ethereum co-founder Vitalik Buterin, have struggled to overcome their disproportionate influence over their projects, raising concerns about centralization. Musk also admitted to Fridman that he is unfamiliar with Ethereum-based smart contracts, blockchain-based, self-executing contracts that execute when predefined conditions are met. "I've never quite understood how this whole smart contract thing works," Musk joked, adding, "I'm too stupid to understand smart contracts." Musk continued, "My general approach to any kind of deal or whatever is to ensure there is clarity of understanding." Musk continued, however, by predicting that the meme-based Bitcoin competitor Dogecoin, or possibly another cryptocurrency, will eventually become the official currency of Mars, a possibility Musk previously hinted at with a proposal to use his rocket company SpaceX to put a literal Dogecoin on the literal moon. Mars, I believe, will require a unique currency. "I'm not sure if Mars would have a cryptocurrency, but it seems likely," Musk said, adding that the future of Mars should be decided by the Martians. Musk, who earlier this year urged Dogecoin developers to upgrade the meme-based cryptocurrency in order to compete with Bitcoin and Ethereum, has weighed in on a crypto-wide debate over Web3, the idea that a decentralized crypto and blockchain-based version of the internet could eventually replace Silicon Valley's Web 2.0, explaining why he is pro-Doge. Six of 2021's most massive crypto heists. Cryptography, eh? We've all heard digital currency evangelicals sing seductive, utopian platitudes, it is altering the world, or, as one BitConnect employee put it, the world is no longer as it once was. It is reshaping finance, no banks required. It's going to make you filthy rich, you moron. All of this is excellent. However, here's what it's likely to do: empty your pockets and abandon you to wander the streets of the nearest city, singing the blues about how a hacker stole your life savings. It's a well-known fact that cryptocurrency fraud and theft are prevalent in the industry. Numerous reports from various watchdog organizations have demonstrated that the largely unregulated landscape of digital finance is rife with criminal activity, which is to be expected in unregulated industries. Add to that the pervasive cybersecurity flaws in crypto infrastructure, the hordes of money-hungry cybercriminals scouring the internet for an unsecured hot wallet or exchange zero-day vulnerability, and you have the perfect recipe for getting your shit robbed. Additionally, it is abundantly clear that rip-offs and theft appear to be worsening, not improving. According to a study published in August by Crypto-Heists, this year was one of the worst on record for cryptocurrency hacks and robberies, with 32 incidents reported and associated losses totaling approximately $2.99 billion, $4 billion-ish. That appears to be an increase over last year's figures, which were a 40% increase over the reported incidents for 2019. And, since the publication of Crypto-Heists' report, a smattering of exchange hacks has served to confirm the report's central thesis. In that vein, here are 6 of the biggest cryptocurrency scams of 2021. Badger DAO. As expected, December has been a busy month for cryptocurrency thieves. Indeed, a few weeks ago, Badger DAO, a decentralized finance platform, was ripped off. According to the platform's blog post, on December 2nd, an unknown party gained access to a number of different user accounts. What will be the cost? Stolen funds totaling approximately $120 million, approximately $166 million. Following that, Badger explained that it appears as though the hacker injected a malicious script into its website, allowing the criminal to intercept active users' transactions and redirect them to the hacker's wallet. Bitmart. Only days after Badger DAO was robbed, $150 million, approximately $208 million, vanished in a cloud of digital smoke from the coffers of popular cryptocurrency exchange Bitmart. On the day in question, the platform announced that it would be temporarily suspending withdrawals until further notice following the discovery of a large-scale security breach involving 2 hot wallets, digital cryptocurrency accounts that are connected to the internet. PeckShield, the cybersecurity firm that first brought the incident to light, described the hack as a fairly straightforward, transfer out, swap, and wash operation. Regrettably, Bitmart's previous slogan, "the most trusted cryptocurrency trading platform," is unlikely to resonate with current and potential customers. Poly Network. The story of Poly Network is one of the most massive and bizarre cryptocurrency heists in history. On August 10th, the exchange was allegedly hacked, resulting in the loss of approximately $600 million, approximately $831 million, in investor funds, one of the largest windfall thefts in cryptocurrency history. Poly's leadership scrambled to create an online missive pleading with the hacker to return their money. "Dear hacker," the letter began amusingly, before pleading with the anonymous token thief for a secure return of the hacked assets. On the internet, the letter was largely met with mockery and bemused sympathy, and nobody believed the stolen money would ever be recovered. Poly's tactic, on the other hand, was successful. The hacker, whoever they are, began returning stolen funds, later claiming in blockchain encrypted memos that they hacked the exchange for fun and to expose a critical security flaw in Poly's system. By the end of August, the thief was said to have returned the entire haul. Liquid exchange. In August, the Japanese cryptocurrency exchange Liquid reported a loss of $97 million, approximately $134 million, due to a cyber attack on its systems that targeted its multi-party computation (MPC) system of custody, a supposedly secure cryptographic digital asset mechanism. Blockchain analysts observed as the funds were then funneled through a series of wallets and mixers, obscuring their trail and ultimately allowing the anonymous bandit, or bandits, to flee with the loot. At least for now. Vulcan Forged. Vulcan Forged is yet another unlucky casualty. The company operates a variety of cryptocurrency-related services and products, including a DeFi platform, an NFT market, and several play-to-earn token-based video games. Anyway, Vulcan was reportedly robbed of $140 million, just shy of $200 million, earlier this month, when a hacker obtained the private keys to 96 of the platform's wallets and emptied them of all funds. The hacker stole an average of $1.46 million, that's $2 million, per wallet, according to estimates. Unlike many other cryptocurrency platforms, Vulcan actually refunded investors for money they had lost, a very charitable move that likely helped the company regain its reputation. FedEx. Then there's the unfortunate story of FedEx, a Turkish cryptocurrency exchange whose young, weasel-like CEO allegedly stole approximately $2.7 billion, approximately $4 billion, in investor funds this spring. After attracting significant investment since its launch in 2017, FedEx abruptly shut down in April, prompting Faruk Fatih Oza, the platform's 27-year-old founder, to fly to Albania. One of the last known images of the dude shows him hustling through Istanbul's airport before jetting off to who knows where. The collapse of the exchange sparked widespread unrest in Turkey, with authorities arresting and detaining 83 people, including members of Oza's family. Except for Oza. Is this guy still around? If you do, approximately 400,000 people are interested in receiving a copy of his current address. An overview of crypto gaming guilds, Play to Earn's future. Crypto gaming is a hot topic right now, particularly in a world where blockchain technology is transforming numerous industries. We've seen some fantastic crypto projects and some that have flopped spectacularly. As a result, while some users have benefited from blockchain technology, others have fallen victim to scammers. A gaming guild is a group or collection of gamers who come together to play video games and share data. While the term guild is the most frequently used in the gaming world, such groups may also be referred to as factions, clans, or communities. For decades, gaming guilds have existed. However, esports, competitive gaming, is the reason gaming guilds have recently grown in popularity. Competitive gaming guilds like Farzi Clan, Cloud9, and Team Liquid exemplify traditional gaming. Crypto gaming guilds all have their own distinct visions. While some are interested in amassing millions of dollars through P2E gaming, others are interested in developing strong communities that produce the best alpha and ultimately the best projects. How it began. The Philippines has been dubbed the originator of today's play-to-earn concept. While COVID-19 was wreaking havoc on the world, gamers in this country were earning money from the Axie Infinity game. #ThankYouAxie was a popular hashtag during this time period, as people cashed in their winnings, photographed their shopping, and captioned their photos with this hashtag. As interest in this game grew, so did its demand. As a result, demand for Axes, the game's in-game tokens, increased. Dizon, the founder of Yield Guild Games, YGG, recognized an opportunity and began leasing his Axes through what are referred to as scholarships. Scholars would receive 70% of the proceeds, the guild would receive 10%, and community managers would receive 20%. Others quickly adopted the model, resulting in the formation of new guilds. The best cryptocurrency gaming guilds. Yield Guild Games. Yield Guild Games is one of the most well-known crypto gaming guilds, with a $420 billion market capitalization. YGG operates a decentralized autonomous organization, DAO, that invests in virtual world non-fungible tokens, NFTs. Gabby Dixon, a gaming veteran and Axie player, founded the guild in 2020. YGG is one of the largest crypto gaming guilds on Discord, with over 74,000 members. It's also worth noting that it's the originator of P2E gaming guilds. YGG has adopted the moniker Guild of Guilds in recognition of the fact that it encompasses nearly every other popular guild in the space. Merit Circle. Merit Circle is governed by a DAO, which serves as the primary holding company for all sub-DAOs. The most visible collaboration is with Axie Infinity, though plans exist to collaborate with Illuvium, Hash Rush, and Star Atlas. Both YGG and Merit Circle have sub-DAOs. That is, Axie Infinity has a sub-DAO within Merit Circle that is limited to holding only Axie assets. If one of the sub-DAOs is compromised, the other games are unaffected. $MC is the guild's native token. This guild offers two staking options. For the MC token, a single stake is required, as is liquidity pool in the MC/ETH pair. Unix Gaming. Unix Gaming runs a DAO with over 1,200 scholars. Unix is compatible with a variety of games, including Axie Infinity, Star Atlas, and Splinterlands. Each of these games has its own sub-DAO that stores its own assets. $Unix is the guild's native. The DAO generates revenue in a variety of ways, including through Axie breeding, launchpads, scholarship revenue, and revenue generated by the NFT marketplace. Astra Guild Ventures. Astra is governed by a DAO, which receives 20% of all guild revenue. On Axie Infinity, the guild has over 2,000 scholars. Transparency is one of the characteristics that set Astra apart from other guilds. The earnings dashboard is conveniently located on the website, allowing users to see how much the DAO is earning and the total amount of assets held by each sub-DAO. $AVG is the guild's native token, with a total supply of 2 billion tokens. Good Games Guild. The Good Games Guild is another well-known organization, with over 300 scholars enrolled in its program. The guild boasts exciting features such as its game incubator and investment arm, Good Game Labs. The Good Games Guild has a DAO that receives 20% of all guild revenue. Titan Hunter, Dope Wars, GameStation, and The Monopolist are just a few of the brands with which Triple G has partnered. AU21 Capital, Animoca Brands, Basics Capital, and OKEX Blockstream Ventures are among the notable investors in Good Games Guild. The guild's native token is $GGG, and the total supply is capped at 100 million tokens. GuildFi. GuildFi is a guild dedicated to establishing an interconnected ecosystem of games, communities, and NFTs that enables metaverse interoperability while also maximizing player benefits. The Guild is dedicated to resolving access and discovery issues while also maximizing players' performance and rewards. Finally, Game, Fi and play-to-earn opportunities are reshaping the gaming landscape, and the guilds mentioned previously have been pioneers in offering these opportunities. This is an ideal strategy for earning money in the virtual world while avoiding some of the drawbacks of the real world. The GameFi space is still in its infancy, and we can only speculate on the future of the entire blockchain space. Why are XRP, Cardano, Chainlink, and Crypto.com dropping significantly today? What transpired? Altcoins endured a difficult day that began late Monday night and continued into Tuesday. While major cryptocurrencies led the decline on Tuesday, smaller coins magnified the losses of larger market cap coins. In the last 24 hours, XRP has fallen 8.3%, Cardano, ADA, has fallen 7.7%, Chainlink, LINK, has fallen 12.4%, and Crypto.com coin, CRO, has fallen 10.3%, to name a few. Several factors are likely to have an effect on trading today. Thus, what? The first thing to note is that all cryptocurrencies are in the red, which could result in a cascading decline across the market. CoinGlass.com reports that in the last 24 hours, $521 million in long crypto trades has been liquidated from 164,115 accounts. The selling began on Monday with a liquidation of $418.5 million in long positions, and the pace appears to be picking up on Tuesday. This may seem insignificant, but when traders borrow money on margin to take a long position, bet on an asset's appreciation, or a short position, bet on an asset's decline in value, they may be forced to sell immediately if they lose too much money. Brokers and exchanges require that a certain percentage of an account be held in cash or the market value of a security, allowing these positions to be liquidated if a portfolio contains an excessive amount of leverage. The last time cryptocurrencies fell this precipitously was on December 2nd and 3rd, when over $2 billion worth of cryptocurrency was liquidated across multiple exchanges. Cryptocurrencies stabilized in the days following the crash, but today's selling has pushed some to levels close to a month ago's lows. What is the next step? Given the market's lack of real news, I'd chalk today's move up to normal volatility. This week, the market has seen a general decline in trading volume, which can result in bizarre price movements. Many traders use a lot of leverage in crypto, which can result in the type of liquidations I mentioned previously, triggering a rapid sell-off. As the market resumes normal trading in early 2022, I believe it is critical to see increased adoption of crypto as a utility product, whether through NFTs or decentralized finance products. I believe that the cryptocurrencies that can best develop their ecosystems will ultimately be the investors' winners. Investors have been bullish on XRP, Cardano, Chainlink, and Crypto.com because they are all developing their own versions of a cryptocurrency ecosystem. Long-term, investors should focus on these ecosystems, not on the volatility of a few days of trading, which is why today's big move should be ignored in the short term. Ethereum, the most exciting cryptocurrency investment narratives of 2022. Summary. Going into 2022, the most valuable cryptocurrency narratives are about NFTs, Ethereum scaling solutions, and crypto gaming and metaverse environments. It is highly likely that decentralized Web3 networks will eventually supplant FANG's hegemony over the future of technology narrative. Investing in Ethereum is the best way to capitalize on the overlapping growth of these cryptocurrency sectors. The objective of cryptocurrency investors is to profit financially from the widespread adoption of virtualization. However, the optimal method is not as straightforward as selecting the best technology. While the best technology will always win in a Web2 environment, the Web3 market operates according to entirely different rules. To be a successful Web3 investor, I believe it is necessary to understand investment narratives in addition to technology-induced network effects. The most significant cryptographic narratives. While the overarching cryptocurrency investment thesis is that centralization is bad and decentralization is good, this broad concept is subdivided into multiple layers in the crypto market based on purpose and technology. NFTs. NFTs have unquestionably been the year's biggest surprise mover. This appears to be for a variety of reasons. Psychologically, NFTs satisfy an innate human desire for community and companionship, a demand which has increased due to COVID. Scarcity. NFTs amplify digital scarcity, frequently with circulating supplies of fewer than 10,000 unique pieces. Virality. Communities of voluntary NFT holders are financially rewarded for spreading the word about their respective projects. This results in organic and cost-free marketing for the NFT initiative. NFTs are fundamentally distinct from coins or tokens. Their customizability, in combination with their proclivity for forming closed and anonymous communities, is a novel concept for the human race. NFTs have successfully evolved into a distinct and new sector of the cryptocurrency economy as of now. To comprehend NFTs, it's necessary to remember that everyone desires to feel significant and recognized. This is precisely why projects like CryptoPunks and Bored Ape Yacht Club have exploded in popularity over the last year. I believe that NFTs are much larger than the majority of people realize. According to JP Morgan's November analysis, the total NFT market cap is currently over $7 billion, although other sources claim $22 billion and $44 billion. To my mind, holding Ethereum, ETH, is the best way to benefit from the NFT market's rapid and upcoming growth. Scaling Ethereum solutions and alternatives. Polygon, Matic, Terra Luna, Luna, Solana, SO, and Avalanche, AVAX, are the market's top gainers at the moment in the scalability/bridges/layer 1 sectors. I believe that in 2022, there is a compelling bull case for Ethereum scaling solutions and various layer 1 alternatives to make significant gains. Currently, the market consensus is that FANG stocks are the future of technology. Alternatively, I believe that Web3 is the future of technology. My justification is straightforward. As people spend an increasing amount of time online, they will naturally desire property rights within these virtual networks. Decentralized networks are superior to institutions or corporations because they enforce property rights through unbiased mathematics. As society becomes more virtualized, it appears likely that individuals will gravitate towards the most equitable and valuable networks. At the moment, Ethereum is the best fit for this outcome. However, due to Ethereum's strong network effect, there is still a highly competitive market for Ethereum alternatives. While this market is significantly smaller than the ETH network as a whole, it is still extremely valuable. Polygon is my personal favorite token in the scalability investment narrative, Matic. Polygon is a scalable, high-throughput sidechain that is connected to the Ethereum network. This means that Polygon benefits directly from Ethereum's growth and can compete with the technology and scalability of alternative cryptocurrency networks. Environments for crypto gaming and the metaverse. This final narrative is inextricably linked to the growth of NFTs. Until now, the crypto economy has concentrated its efforts exclusively on the development of decentralized networks. As successful implementations of these networks mature, demand from users seeking to do something with them will increase. I am most bullish on play-to-earn, P2E, cryptocurrency gaming and metaverse environments. The Axie Infinity, AXS, play-to-earn game, as well as the Decentraland, MANA, and Sandbox, SAND, metaverse environments, have all seen explosive growth over the last year. Crypto gaming is expected to gain traction in the near future, as hundreds of gaming studios are currently developing crypto-native titles. It is critical to note, however, that this growth will extend beyond the traditional definition of gaming. There is an emergence of decentralized metaverse environments. These games are designed solely for the purpose of allowing players to exist. There is no specific purpose to these games. Users in these environments retain the option of purchasing and developing virtual land, as well as attempting to earn money from it. At the moment, functional metaverse environments such as Decentraland and the Sandbox replicate the gameplay of Grand Theft Auto 5 or Minecraft. What distinguishes metaverse environments from other virtual worlds is their incorporation of tokens, non-fungible tokens, and decentralized networks. I concur with Bill Gates' prediction that within 3 to 5 years, the metaverse will host the majority of your office meetings. This outcome, I believe, is an unavoidable byproduct of society's virtualization. Once again, as we become more virtualized, people will seek out the best environments in which to spend their time. Currently, many businesses operate via countless and monotonous Zoom calls due to a lack of other options. I can see these Zoom calls eventually relocating to the metaverse. Conclusion. Finally, I believe Ethereum is the best overall investment for 2022. If you want to outpace ETH's growth, I recommend looking for high-quality projects that fit the NFT, scalability, crypto gaming and metaverse narratives. What DAOs can do, social movement or recreational facility. Reconsidering 2021. Is 2022 going to be the year of DAOs? 2021 was unquestionably an explosive start. The explosive and disruptive innovations associated with blockchain appear to stem from a shared ontological hunger, that deeper aspect of the human being that yearns to fill in the void that separates us from other animal species. Spoiler alert, the void is unfillable. However, attempting to do something with it, creating, innovating, going against the system, etc., is what keeps us moving, conscious, and alive. The alternative is to devolve into mindless zombies that do exactly what they are told. What you should know about decentralized autonomous organizations. Thus, DAOs. Smart contracts, decentralization, and collectively devising an alternative to traditional structures, 3 powerful men at the top and thousands of workers unable to participate in major decisions affecting the environment to which they devote their lives. Essentially, the majority of corporations. Web3, DeFi, the metaverse, NFTs, and DAOs all flourished in 2021. It has all begun to gain mainstream acceptance. It's growing in size and popularity, and it's becoming ubiquitous. However, there is so much happening so quickly that the larger picture of these innovations is not yet defined. Nonetheless, it's critical to approach the urge that underpins everything that's exploding around us, as it's almost certain to become ingrained in everyone's life. Therefore, what are DAOs? Correct, but that didn't tell you much. They represent a sea change in the way humans coordinate, Spencer Graham, DAO House project lead, explained. He believes that many future businesses and organizations will be structured as DAOs. Additionally, he noted that the word decentralized is probably the most critical one in there. Nowadays, the majority of these groups are focused on distributing an organization's power among its members in order to make decisions and changes. There is no one man in charge. They enable the achievement of collective goals without requiring complete trust in all team members, because they simply cannot corrupt the process, and trust is based on the algorithm as the sole intermediary, or an external legal framework to keep things on track. The governance of DAOs is designed to ensure that each vote is taken into account. Nothing will be carried out if a quorum is not present. You are not required to be suspicious of ballot tampering. Consider how straightforward presidential elections would be. Review of the year 2021. A word of caution: I'm not about to compile a list of trendy blockchain startups. Let us discuss what is occurring. DAOs are becoming more difficult to define. To begin, they serve as a means of coordination. However, when we delve into the details, we discover that there are numerous types of DAOs. Variations are largely determined by the purpose for which the organization is being used. What is the organization being used for? DAOs have the potential to displace large entities and give small businesses a chance to compete against venture capitalism. They could also be an investment club, with members pooling their funds to achieve a common financial goal. Primarily, I believe that the majority of people in crypto are either attempting to earn money, create something of value, or both. All of the options are acceptable. Individual members of a DAO are unlikely to be able to accomplish their objectives on their own. As a result, people require people. Indeed, people require other people. We've all become a little too cynical at this point to believe it, but it's true. When you truly observe how the most critical aspects of crypto operate, those that have the potential to have a direct impact on society, it becomes an unavoidable reality that we require one another to accomplish the greater goals. In 2021, a DAO attempted, and nearly succeeded, in acquiring one of the most valuable copies of the Constitution. Their efforts became so valuable and popular that additional DAOs were formed to purchase items such as Jodorowsky's Dune manuscript and even an NBA team. While this may sound geeky, it's also heartwarming to see how people are discovering ways to gain access to things they could never have imagined, and stick it to the establishment. It's also worth noting that 2021 was a year of despair. People are fed up with oppressive and toxic work environments. What is the issue? While the organization's passion for resolving large systemic, institutional issues sounds admirable and encouraging, passion always has a dark side. There are concerns about smart contracts and decentralized autonomous organizations, DAOs. Could they be a scam? Is it possible that reliance on smart contracts will become a hindrance to business decision-making? In some cases, information has been withheld from the community and public, defeating the purpose of decentralization and calling into question the legitimacy of certain organizations. Additionally, in 2021, we saw that some DAOs can be wolves dressed as sheep. Visa hopes that its new cryptocurrency consulting arm will help it stay one step ahead of the competition. The world's largest card company has just increased its bet on crypto. Visa announced today the launch of a crypto advisory practice within its Visa Consulting and Analytics (VCA) division for its clients and partners. The announcement comes just months after Couy Sheffield, Visa's head of cryptocurrency, declared the asset class cool at a fintech conference last month. The payments behemoth made headlines earlier this year when it acquired a CryptoPunk NFT, but its decision to open a dedicated crypto consultancy demonstrates that its efforts to capture crypto market share in a crowded field extend beyond marketing stunts. Visa's partnerships with cryptocurrency exchanges have more than doubled in the last 18 months, Sheffield told TechCrunch. Consumers have also spent about $3.5 million on crypto-linked card programs, up from $1 million in July, Sheffield said. Additionally, it announced the findings of a new global survey it conducted on consumer attitudes towards cryptocurrency, which revealed that 40% of its 6,000-plus respondents would consider switching primary banks to one that offers crypto products. Sheffield said the company has received an incredible volume of inbound calls from hundreds of clients, partners, and traditional financial institutions interested in integrating cryptocurrency into their offerings. Visa's consulting arm employs approximately 700 people, though the company did not disclose the number of employees associated with the crypto practice. We believe Visa is well positioned as a global neutral brand with deep expertise in crypto, capable of abstracting away some of the complexity associated with these emerging technologies and assisting banks in incorporating them into their core products, Sheffield said. Visa recently announced a $60 million Series B investment in blockchain compliance firm TRM Analytics. American Express and Citibank also contributed to the fundraising effort. Visa is just one of several card issuers scrambling to gain a foothold in cryptocurrency, which is threatening their fee-based business model by serving as the new underlying infrastructure for payments. MasterCard, for its part, launched a cryptocurrency rewards program in October, utilizing Bakkt as its digital asset custodian. Visa does not hold crypto assets directly, but rather partners with Anchorage Digital, a company in which it first invested in 2019. Visa is expanding its crypto API platform on top of Anchorage, Sheffield explained, enabling other banks to access their custodial services. Sheffield anticipates growth in both Visa's crypto-linked debit card programs and use cases such as central bank digital currencies, CBDCs. Although only 7 countries have established CBDCs to date, the Atlantic Council reports that 87 more are considering them. Visa hopes to capitalize on this interest by assisting banks in developing CBDC-related products, according to Sheffield. We've spent a great deal of time researching the infrastructure that CBDCs would use to deliver consumer experiences and the way consumers would interact with them. We're taking that expertise and the engagements we're having with central banks and assisting banks in considering their role in preparation, as we believe a number of countries will take this path, Sheffield explained. We hope you enjoyed watching and listening to this video. Please let us know your opinion in the comments area below. If you found our content useful, please like it and share it with your friends. Also, don't forget to subscribe to our channel and hit the notification bell for more crypto-related contents.